Hello traders, it's Victoria from TRADEPRO Academy. I hope everyone is doing well and welcome to our channel, welcome to our videos. In today's video, what we're going to be talking about is how to use order flow, specifically the depth of market or the DOM, to identify more precise entries in the futures market. Okay, so we're now back at the computer here, and we're going to be taking a look at a few different things here on the DOM and using order flow mainly to find not only entries, but trade ideas here in the futures market. And so, like I said, we're going to be using the S&P 500 here. We are going to be using the futures on the S&P 500, and we're going to be using Sierra chart mainly for this breakdown. Now, there's a few things that I do want to talk about before we jump right into this, and that's going to be a little short intro on the DOM. Now, remember, we did a video already on the DOM breaking down all these columns and what they mean, so I want you guys to go and check that out. I also want you guys to check out the intro to the volume profile, because this is something that we're going to be using throughout the session as well to find those key levels. And then what we're going to be doing is going through those two little intros on the DOM, on the volume profile, and then we're going to be going through what we're supposed to be looking on the DOM for trader reactions, an example on the DOM, and how to pinpoint those areas. So with the DOM, this DOM right here, the visual aspect of this DOM is pretty key. We have several columns here. We have the two volume profiles, we have the pricing, we have the bid and the ask, and then we have the main two players here of the scenario, and it's going to be the middle columns here, which are going to be the actual market orders traded, and we're going to have the bid and ask profile here that actually splits up the bid and the ask. So these are the main two columns that I do like to use on the DOM, right? We've talked about how we look at these in another video, so I'm just going to go with the assumption that you've already seen that and talk about what it is exactly that we're looking at in these areas. Now, with the volume profile, right, whether it's today or whether it's today that I do want to replay, what you should be looking at on the volume profile is identifying key levels, right? Key levels on the volume profile based on ledges, right? Based on ledges that divide different distributions. So if we take a look at just a general volume profile chart, right, and you zoom out on this, whether it's a 10-minute, 5-minute, whatever the case may be, maybe it's a 15-minute, I want to identify where these key ledges are going to sit, right? You can see the 96 here, for example. We could move some of these down, right, just to encompass where these ledges are, so on and so forth. And these are the key areas that I do want to trade. You can see that a lot of these ledges here have been identified from the volume profile. You can see where these distribution blocks lie, and all I'm doing is finding the areas where the thick high volume nodes drop off into low volume, and that becomes a ledge and a barrier for price to either hold into the balance, or when it escapes, use that area as support resistance. Now, the point here is all these ledges, they'll act as different support resistance areas no matter, right? And obviously we should understand where these volume profile distributions are, right? Because if we enter into them, what we're going to do is use the ledges as support and resistance to keep price within or keep price outside of those areas. So now that we have a little introduction on that and this DOM volume profile stuff, what I want to do is take a look at what is important in these columns as a trader, right? What are we supposed to be looking at? How are we supposed to be looking at these things? And what is going to be a takeaway for us in finding trades and entries? Now, the DOM in these middle columns, right, it's open right now in the US, in the overnight session. And I'm just going to be doing a little replay based on a positioning like a few weeks back, a few weeks back that looks very interesting, that populates the middle section of the DOM. So what we're going to be looking at is at these levels, right, these volume profile levels that discern different distributions, we're going to be considering these areas as inflection points, right? Inflection points as to where price is going to reject, right? No matter whether we're pulling down or we're pulling up, right? Obviously the trend of the market is very important. Now, if we have a massive downtrend, I would be very, very likely to wait until some of these areas are accepted and what the pullback into those key distribution ledges is so we can get that continuation to the downside. For example, right, we have a pretty strong downward trend on the session. We break through a lot of these key distributions, right? We're using this 40 multiple times between 40 and 42 as a very key area for the pullbacks to continue this trend. We break, right, this 29-30 region, and what happens? You use it as support a few times, you break it, you hold it as a retest and get that continuation. You can see if you have huge key important levels, you can use them as inflection points no matter what the trend may be. But if you stick to the trend, you'll have a higher success rate, I feel, in finding those opportunistic longer moves, right? When you break and retest this area, you pull down, you retest this 11, right? Almost comes into the 20 here. You break this 96, right? Very just drastic drop. But overall, you can see how these inflection points work. So the point being is, when price runs into some of these inflection points, what is it that we're looking at on the DOM? So the first key concept that we do have to understand about the DOM is that when you come into an inflection point, you will not get, for example, a buy without any buyers on the DOM. Now, this is going to be the main buy column that we're going to be looking at, where you see the last quantity traded of aggressive market orders on the buy side, right? You are not going to see a very definitive, clear bounce in the market without an aggressive buy at the DOM, right? So what that would look like realistically is, assuming that we have this area right here, right? We can translate it over here. We're going to look at an example as well, but assuming we have an area like this, what we're going to be looking at in this area is for large numbers, right? Something in the 200s plus, right? These are going to be rebids. Now, when they come into this market, right, maybe a few of them stack up, multiple 100-lot orders that come in. Their job is to press the price higher. They need to uptick this market. If they uptick this market and the market pops, like whether it's a point, 2 points, whatever the case may be, and we have a cluster of an area of multiple rebids, this becomes an area where the longs are happy about the market and where longs want to sustain the market. Now, to the opposite end, if something of that nature occurs and you get 200 rebid, right, multiple levels, right, maybe 200, 150, 300, right, and then 400 at one point of area, right, down at these lows, and the market cannot uptick, this is no longer a strong buyer, right? Assuming these guys come in and all of a sudden the market turns back a little and down ticks a few ticks. These guys are not strong buyers in this scenario. And for the market to go up, you are going to need to see strong buyers. Now, if we take a look at the opposite scenario, where we have sellers into a resistance, right? Assuming that we have them into whatever resistance into these like 11s right here. When they show up into the 11s right here, right, you're going to need to see the same thing. Or they're going to be like strong sellers, 200, 300, whatever the case may be, but they do need to down tick the market. That is going to be a key. They would have to down tick the market. Otherwise, right, they pull up and these are no longer strong sellers and you could expect to see more of a highlighted move. So the main premise here, keep this in mind, entries, right? We talk about entries. When you look for an entry, you need this reactive buy or sell, depending on what you're looking for, what kind of position you're looking for as an inflection point to come in. And you can find a cluster of maybe a point and a half where these buyers come in and uptick the market. That is going to be the area where you want to be long, because you're going to come in with those buyers and they're going to help you sustain this market. That's the whole point, because we're little fish, right? We're not the 200, 300, 400 lot traders, right? Well, most of us aren't, especially if we're watching these videos. We're not going to be those guys right now. And you want them to help out and defend this situation. There's other things to look at on the DOM, which I do want to talk about in other videos, but quickly, there is such thing as when you come into a support zone, right? You have both sides of this DOM playing, buyers and sellers, and it's all about the reactivity of one and another with each other. It's all about that reactivity. So when you come into an area that you might like, right? For example, if we come into this 96 region, right? Let's play this out. You come into this 96 region, and this is an area that you like, right? Remember, number one, into this 96 region, the bid side on the DOM has to show up with buyers. Now, there's other scenarios where when you fall into this area, the sellers start getting weak, whether it's maybe a 70, 80, a few little measly sellers come in, they down tick it a bit, maybe they get uptick. That would be scenario number one, to hold out that there's weak selling, right? Scenario number two is when you get to the bottom of this area, you can potentially see stuck short traders, which means in the sell column, when you have a stuck short, right, you are going to look at this area and you're going to see a huge trader, maybe 600 to 1,000, maybe 2,000 lots trade in the middle column. And you'll see them here, right? They'll stick out like a sore thumb. Maybe you see these guys that appear at these lows right here, just before a key bid or just at a low, and price cannot go down and price cannot go down. And they add into these guys, they add into the market sell, price cannot go down, they uptick them. This becomes a stuck seller. And of course, this market's not going to go up with our reactive buyers. So these guys need to show up with large numbers, right? Assuming that you have maybe 1,200 stuck at the lows. Even if you have 3, 4, 500 that uptick this market from the sell side, you're going to get that reactive turning point and that reactive bounce. So keep that in mind. So when we take a look at this and take a look at a few of these examples, we want to pull up a replay and show you what exactly it is we're looking for on this DOM, right, with an example. So this was mainly the theory, but let's see how this actually works in a market moving setting. So we have an example here, right? If we play it, we'll see that we have a little replay here from a market open, right? Let's just fast forward this a bit. And here comes the market open. And we're going to be very, very focused on these middle columns, right? Let's rewind this a bit. We'll be very, very focused on these middle columns. And what we're going to see is that you can see that there's some decent buying that's shaping up here, right? You're seeing larger orders come in, and whatever sellers are coming in, they're just getting a rebid back above. You have 320, right? Even 400 sellers come in, no problem. 310 buy above them, right? They're continuing, moving to the upside right now. Even you have 250 buyers at these tops. Some sellers do come out. These are some of the reactive sellers. Remember, we want to find action in our inflection point. So around that 75 up to like 77 would be an area. You can see buyers are coming in right now. And these buyers, they come in. You have multiple hundred lots trading at this top right now at the 75. You have 280, you have 200, you have 133, 133. And then all of a sudden, 232 sell side comes in and pushes price lower. So what's going on right now is some larger sellers are coming in. They're actually slapping prices lower. Now, one key thing that you have to notice when you're reading the DOM is the speed at which these guys react and how they react. So let's watch this a little closer. Right now, there's a fight right there, right? What just happened at 75 half? 524 buyers came in, right, on the long side of the DOM. Right here in this middle column, 525 buyers come in, multiple lots long, right? You can see right here. And all of a sudden, just under 400 sellers come in. And when you see 500 buyers, you need an uptick for this thing to go up, right? This is the epitome of what might happen with a stuck long in this area, right? It's not that drastic, but you're supposed to uptick on a big buy. 400 sellers or so come in, down ticks. This becomes an area where you would like to trade for the shorts, right? Around 75 half, maybe 75 3/4, 76 area, right? You have a 3-tick area where you could be getting comfortable looking for that short side, right? Ideally coming down into some of these regions right here. So let's see how we shape up. The key with this is you can see 630 buy side, right? When they came out, 530 buy side. What they're doing, 600 buy side, 320 buy side, right? They're struggling to go up. They're struggling for prices to rally here. And sellers, although weaker, are managing to sustain this price action. So in this area, right, shorts can be opened up for maybe a little push to the downside, because what you're seeing right now is there are some reactive sellers coming in. Some of these guys are trying to push to the long side, but it's just not working. And on the downside, what you have to see is continuous sell. 600 sells, it does the job, it pushes lower. As long as you can continuously sell larger numbers, you're going to see some of that push down, right? You're going to see the expected market move to the downside. So you can see they're still trying. Remember, this is a pretty decent area to reload some of that short if the short wasn't already opened. Right, just watching right now, you can see some of these buyers came in, 600 buyers, they did the job, right? 515 buyers are doing the job for the long side. Remember where these guys got short originally? About 400 shorts here with these longs kind of losing ground. And then again, massive short. This is the reactive short right there. That's the reactive short, right? 542 reacts right at that 76 area where those sellers were supposed to come out, right? These are the areas where you're wanting to get that short side, where you get that push down, right? That's the area where you see the reactive seller. You saw the reaction, how fast it came, right? And you got that push down. Now, the idea here is obviously you need to see more of a sell if this is going to be a continuation, because the more they kind of dilly-dally around the area where you saw 500 buy last time and you don't come back into these like 60s, the higher probability that when you come back into this area, these sellers might lose the ground, right? They have their chance. They're only moving down 5-6 points. They had their chance to clear those guys and they're just not doing it, right? So yeah, it's a pretty solid trade. You'll get 5-6 points out of it. But what is the extent of the move? Because you can see 700 right there, right? 700 buy side, reactive short right away. These guys right here, longs got crushed, massive 3,000 almost longs, down tick and massive push to the downside, right? With sellers intact. This is a pretty quality short from that prior qualifier. And just because they shorted there once doesn't mean that we stick a limit out when we're down here and say, okay, they're going to short it again, right? You want to still see what the DOM is doing, how this DOM is reacting. Because these guys go over again 700 and they actually pop and go buy side. You got to be very careful at what is going on in this area. Again, sell, buyers come in, get a little pushed aside. Right now, 583 buy side, right there. 620 buy side, right? 677 with some sellers getting trapped, right? These are the reactive buyers that can ping pong this back up. Let's fast forward a little here. And this is going to be a key area, right? Right at this top, we want to watch because that's where the sellers came in the last time around. And you're seeing 310 buy side, right? They're upticking it a bit. Fight again. Buyers aren't losing steam. $400 buy side just pops up. You don't want to be short in these areas. 600 buy side comes in, they're holding out. 700, 800 buy side, they uptick it. You cannot be short in a situation like this, right? You can see where the massive longs came in, 76s, massive longs 800, huge longs continue, 79, 800 goes uptick. You can't be short in a scenario like this, right? They're going to rebid it. Now, what you've done is you found a potential pullback for the longs, right? You can come back into these regions where they got super aggressive on the buy side, right? Let this thing pop, let it do its thing. And you're going to be looking at these areas, right, around 79 to 78, right, where you can pinpoint maybe 1 point of action to get on the long side, right? They're still buying massive orders. You want to pinpoint the big orders that break these tops, right? So it's going to be somewhere here where you can see they got massive longs coming in on this DOM. And you can look at that area for a pullback scenario to get on the long side, right? When you break tops, you want to see how big the buy side is through that top break, right? And exactly where they come in. So when you pinpoint this area right here, it becomes a pretty good region, right? Even down here, pretty good region to look for those longs for that next push back to the upswing, right? So they come back into that 78, 77 region. You can see 700 go buy side at 78 quarter, right? There's a lot of buyers in and around this area. This seems like a good level for the longs, right? Into that 77 region, right where they popped off and big buyers came through that breakout. So this becomes a potential long area, right? You can look for the longs in this area. They keep rebidding, large buyers coming in, right? This is an area where they'd like to sustain the long side. And you can see some sellers come in, 1,000 sellers. They're not making the move to the downside, reactive buy side, right where they bought for that breakout. You're going to be looking for the long to extend into that 84, 85 region, right? Let's see how this plays out. And right there, you can see we pop from that 77, 78 region and we come into that 86, right? Pretty aggressive move to the upside. And that is what we can look for. So I just wanted to show you this quick little replay, this example of exactly what it is, where we can pinpoint how to use this DOM. And we do want to show you a specific strategy in a coming video of how to find an aggressive inflection point. So if you guys are excited about that, just drop a comment down below naturally. And this is the example that I did want to show you on the DOM. We found some shorts, we found some longs, we found some inflection points, and using the levels with the volume profile and the DOM, we've combined a very simple strategy. Even this pullback, right? We noticed where those longs were getting in. And I want to say something as well. It does take a lot of practice to read this DOM. It's not going to happen overnight. You want to watch the reactivity of how both sides fight each other, right? How to pinpoint those areas, the targets, right? All that good stuff. If you guys really enjoyed that video and really liked what you saw in terms of order flow, all you got to do is comment down below what other order flow things do you want to see from us. I want you guys to hit that subscribe button, mash that like button, and ring that little bell to notify you when we drop videos like these and go live. So there's a few things in the description, a few free resources. Go check those out, and I'll see you guys in our next video.